Will Uhuru Kenyatta oppose a move to reduce interest rates for a second time? A bill that hopes to reduce the cost of credit for borrowers sponsored by Kiambu MP Jude Njomo passed the National Assembly on Wednesday. It is now awaiting presidential assent, but he may veto it like his predecessor did. The most controversial proposal, that first one, capping interest rates at 4% above the Kenya Bank's reference rate, or KBBR. If that were in effect today, the most expensive bank would have to lend at 14.5%. It also pegs the minimum interest rate payable on deposits held in interest-earning accounts at 70% of the central bank rate, CBR. A bank cannot be jailed, obviously, but an offending CEO won't be so lucky. The bill, which enjoys bipartisan support, proposes a jail term of 1 year or a fine of 1 million shillings. Both the central bank and commercial banks have opposed it, but it enjoys support from both sides of the aisle in the National Assembly. So that is an important point perhaps to consider, to see just how popular it is, on regardless of which side politicians are on. I'm now joined now in studio by Jude Njomo, the MP for Kiambu Town, who sponsored that bill. Thank you so much for being here. Habil Olaka, chairman of the Kenya Bankers Association, and the Economist, Anzetse Were. Thank you all for being here. This has been tried before, Honorable Njomo, with the Jude 15 years ago or so, and then more recently,
yes,
with the MP for
Game,
the MP for Game then,
yes.
Madowo. Why do you think it will be successful this time?
Because of the situation that we are in as a country. You must realize that almost on average, banks are lending between 18% and 24%. And the people who have employed us, the wananchi, are saying there is no way you can do sensible business if you are borrowing a loan to do a business and pay a 24 or 25% interest. And it is agreed that if you are doing a business and you are making 30% as your profit, you are doing a very good business. But out of the 30% that you are making, you pay 25% to the bank as their interest. So you are left with only 5%. It doesn't make sense. So the profit that every business makes must be shared with the bank and with the borrower so that everybody makes profit. Otherwise, our employers, the wananchi, will just be working for the banks. It's only the banks who will be making profit, while the people who are borrowing will just be losing their property and they'll not be making any profit.
The bankers are opposed to this. In fact, the Kenya Bankers Association, Mr. Olaka, is asking the president not to assent to it. Why is that?
I think, Larry, the thing is that I agree with the Honorable that the interest rates in the market are high. I think on that point we don't disagree. We are concerned about the level at which the interest rates are in the market. I think where we differ is in the solution, the prescription that's being given to resolve the problem. Capping the rates will not be the way to go. I think one of the things that we need to look at is the fact that a number of measures have been put in place. If you look at where we were in 2002, for example, where the margins that we are talking about were in the range of 20%, the spreads, they have now come down to roughly about 10%. So over this period, we've been able to make some progress. The only thing is that maybe the progress is not good enough.
That's the progress is not good enough, and initiatives like the Kenya Bankers rate, KBBR, for instance, have not worked. That's why maybe they're trying to do this. Yeah. Now, what I was coming to is the fact that there are a number of measures that have been put in place to try to address the problem. The problem is not a simple problem where you have got one bullet that will kill, will solve the problem. Okay. So KBRR was one of them, trying to introduce transparency in the market. So we have got KBRR, we have got APR, for example, yes, which tries to ensure that we have got power to the consumer, who then can be able to choose across the various service providers to, see which product is most, I'm sure you want to tell them to go to the website, costofcredit.co.ke, and they can look at all these details and enter whatever they want.
Yes, that's one of the options in terms of trying to ensure that the consumer has got access to the information.
Okay, and that's it. What would be the effect if the president were to assent to this bill?
Well, there's an interesting tension going on here because, of course, the general position is that interest rates should go down because they're constraining economic growth. People cannot afford the credit. At the same time, there is a monetary policy issue here in that if you release too much money into the market, you'll create inflationary pressure, where people will now have to spend more on the basic goods and services that they need for their daily lives. So I think one of the things that government needs to think about is also their own fiscal policy, because what happens is that government, when they're putting together budgets, often overstate domestic revenue figures. And then sort of in supplementary budgets, we see, oh no, we need to borrow more, we need to borrow more.
Because they fall short in the...
They fall short, and then they have to, borrow in the domestic market, and then that puts pressure up. So I think there are two things going on here. One is that we need to lower interest rates, but at the same time, we need to do an analysis of what is that inflection point of when interest rates are helping the economy and when they're not helping the economy. And that, coupled with more prudent strategic advice from government in terms of fiscal policy, I think will sort of begin to mitigate the pressures we're seeing right now.
One of the other fears about the effect of this would be that a lot of people have said credit will almost dry up for ordinary borrowers, right? Do you see that as a possibility?
Well, I think one of the problems in the Kenyan market right now is that people only think of financing in terms of debt. Yeah, and I think that's one of the reasons why banks are able to price the way they price, because they know Kenyans think of loans when they want to build their business.
Yes.
But I think part of the thing that Kenyans need to start doing is look at alternative financing vehicles, private equity, venture capital, and really we need to open ourselves to that reality of financing so that not everyone is going to a bank to get a loan.
I also want to disagree with that notion that many people will be locked out. Many people have already been locked out by the high interest rates. How many people can afford to pay 25%? How many people can be able to afford 20%? So already the doors are locked. The people the banks are saying they are protecting, they are already locked out. So it will not have any effect on the small borrower, on mwananchi wa kawaida. It will not have much effect because already they are not borrowing. Look at the adverts that we are getting every day on radios, on TVs. SACCOs are booming because SACCOs are charging 1% per month. 12% per year. That makes business sense. And everybody is rushing to the SACCOs. New ones are being opened because those are the avenues where mwananchi wa kawaida can be able to borrow from and do his business.
So he makes a legitimate point about mwananchi wa kawaida right now. When they think about a bank loan and the interest rate, maybe they're already locked out in theory.
Actually, that's not true. The level of funding that, for example, banks are extending to the SME sector is significant. I think Kenya, compared to other economies like Nigeria or South Africa, we are doing pretty well. We are almost 20% of the total credit portfolio in the banking sector is directed to SMEs, which is a plus for us. Now, you may say that there are those, the members of the Kenyan society who are not accessing banking services, but indeed there are efforts to try to ensure that they are reached. Part of the problem is actually access, not the cost. They cannot be able to access banking services, and all the innovation that is coming up in the banking sector is geared towards ensuring that those people are moved from the informal sector into the formal sector. Now, the bill that is being talked about here, the impact is going to have on the banking sector and the economy at large is quite significant. Mheshimiwa talked about the fact that people will be locked out. That is a reality. What will happen is that if, for example, the interest rate is capped at, say, 14.5%, what a bank will do is to assess the borrower. If the risk profile of the borrower is higher than the 14.5%, you wouldn't take it on board. It doesn't make economic sense.
Right.
So you not take it on board.
When the KBRR rate was designed,
right,
it had taken into consideration the profit of the bank and all the interest.
So the margin was already accounted for.
Okay. And the bank was given a leeway to assess the risk of the borrower and now put it over and above the KBRR rate. Now the banks are doing even double of the KBRR. We must be very dangerous borrowers as Kenyans.
Is that
be very, very risky.
Is that true? Other banks are doing almost double the Kenya bank's reference rate?
Well, I think we need to understand that there's a problem with the savings culture, which is partly what informs the risk that these guys are talking about, is that because we don't live in a welfare economy where government spends on education, on health and stuff like
social services,
it's very difficult for Kenyans to save. As a result, that informs the risk that banks get into when they're trying to price their loans. So I think there are a couple of things going on, and it's not really an issue of banks are bad or banks are good, but it's about monetary policy, fiscal policy, Kenyan saving habits, and how that culminates into high interest rates.
Okay, let me just give you a quick update because MPs from both sides of the aisle have passed a bill that would fix interest rates at a maximum of about 4% above the Kenya Bank's reference rate, which is just we've been talking about. The central bank put out a statement. In fact, they're opposed to that. This is what they said. We continue to express concern on the adverse consequences of capping interest rates. This would include inefficiencies in the credit market, credit rationing, promotion of informal lending channels, and undermining the effectiveness of monetary policy transmission.
Absolutely. No, it's a real problem because what happens is that creates pressure for monetary policy. When you have a situation where, first of all, government is stepping in to cap rates,
Yes.
you know, that distorts the market in and of itself because we're not looking at supply and demand, we're looking at, you know, strict policies or strict addition. But what happens, as I said before, is that when you begin to expand monetary supply in the economy where more money than usual is circulating in the economy, as CBK says, that creates an upward pressure on inflation. Yeah,
Okay.
and that makes life unaffordable for many Kenyans.
Before you speak, Honorable Njomo, I just want to show you some of what Kenyans are saying about this because we went out across the country and kind of gauged the mood of the country on this subject.
It is important that the president signs that law so that at the end of the day, we make interest rates accessible to all Kenyans.
We would like to appeal to the president, if he really cares about the youth who are doing business, he should actually sign this bill so that it can help in spurring the economy to grow much faster.
Kuenda kwa hizi benki kuchukua mkopo huwa ni ngumu sana kuchukua. Huwa ni ngumu sana kwa sababu rates huwa ni iko juu sana, lakini inatakikana kuwa na control ambayo inaweza kusaidia watu wafanya biashara. Ningependa unye asitie saini mpaka watu wapate knowledge vizuri na waweze kujipanga. Hiyo riba irudi chini, hata kama tuseme kwa mfano kama ni 5%, irudi 2%.
The interests are always high. They don't reduce when the economy is okay. So the MPs should go ahead and pass that law, and the president should sign it.
And the Excellency, the President, put that concept immediately. That one is supposed to be effected immediately so that everybody can now be able to reach the bank.
I'm going to go to Habil first to respond to that. You see what Kenyans say?
Yeah, I think we can see what Kenyans are saying, but I think the critical thing we have to do is to actually inform them. Let them be informed of the consequences of this bill. You know, the bill has picked up popularity, and because Kenyans are not informed of the consequences, they think that when the bill comes into place, banks will lower their rates and everybody can be able to access money at the cheaper rate. That's a dream. Banks will not do that because it doesn't make sense. What will happen is that those who can be able to be priced at that level will access money. Those who cannot be priced will have to get money elsewhere. What will happen then is that people will have to go into the Shylocks. Those are the ones who are going to thrive. So the formal lending sector will pick up. Do we want to go back to where we were 20 years ago, where the informal lending sector was one that was thriving? I don't think we want to go there. And that is the simplest, consequence of this bill.
And that's the shaking her head, but I want to start with the Honorable Njomo first.
Rari, what Wananchi are saying here is that what the banks and the economists are saying ni kizungu mingi. They want lower interest rates so that they can be able to do business. 20 years ago, when Honorable
Joe
Donde introduced this bill, this same argument was brought by the banks, and they said they are going to bring in their own internal mechanisms to reduce the interest rates. We have been waiting for 20 years. We have not seen that. 10 years ago, Jacoyo Midiwo brought the same thing, and now they were even supported by Treasury, and they said they are going to bring in legislation which are going to reduce interest rates without necessarily capping.
It didn't happen.
It didn't happen.
May I
So
say something?
we feel like legislators that we must do something that is going to bring down this.
Part of this problem is because a lot of Kenyans and a lot of businesses function in the informal economy. So that is a pricing problem in itself, in that when informal businesses are functioning, they're not adequately structured to finance loan and all that sort of stuff. So when they go to a bank, they haven't got their business and their papers in order necessarily.
Right.
So then the bank views them as risky.
Okay.
So I think part of the problem that we're seeing here is that really the focus should be building up informal businesses, making them credible investments so that they can access loans at a lower level. Just giving people free loans, banks are gonna freeze. Yeah. So what we need to do is that look at the informal economy, make them more credible, so that they can be financed an asset at the right rates.
But the fear also exists, Honorable Njomo, a moment, Habil Olaka, that this kizungu mingi also exists. And the ordinary, especially in the formal sector, they feel like they can't approach banks because you don't understand what you're being sold or why you're being denied a loan. But it's all there in the small print.
Yeah, you know, the thing is that and in fact we had a discussion with the parliamentarians. I think the biggest problem that you see in what is being proposed, the people who are going to suffer most are the SMEs. We have come up with a solution towards addressing the SME problem. We have actually proposed to set up a fund, almost 30 billion shillings. 30 billion shillings, look at it from a constituency perspective. We have got 297 constituencies. We're talking about 100 million shillings per constituency available. Then we are also trying to put in place with that a capacity building fund that will ensure that the SMEs are actually facilitated to be able to get the basic information that they require to be able to access the banking funding. Now, with that kind of support and liaising that with the Ministry of Industrialization, I think we are thinking along the lines of trying to facilitate the economy rather than the retrogressive legislation that is coming into place to deny us that opportunity to ensure that there is progress.
Do you buy that?
Economic development.
Is a step maybe too little, too late? This was brought in as a result of trying to stop the legislative process from going on. But it is a step in the right direction. And it also shows us that the banks, if they are pushed to the right places, can do the right things. But I would like to say one thing. Law is not static. We can introduce this law, let them bring up a proposal, let's see that it is working, then we can change the law when the right time comes. We can. That is an idea we can be able to buy.
Okay.
But they can promise us that, then we stop the process and it will never happen.
All right.
So since law is not static, we go ahead. The law has been passed. I urge the president to sign it. We continue. When they bring in a system that is working, we can easily change the law and bring in their proposal.
And that's what's your prescription?
It's not that simple. I'm really sad to say it's not that simple. When you're assessing businesses and individuals for loans, you have to look at the risk factor, and he's talking about that. But the reality is that a lot of informal businesses don't have credible accounts. When you're talking about pricing a loan, let's even talk about the tax issue. How do you establish tax liability when proper accounts aren't in place, right? So that becomes a risk function. So I really agree with him in that, first of all, we need to find a way to formalize businesses and make them more robust, make them financially credible, and make them, organizationally credible as well. And then from there, they will be able to access lower rates in terms of the loans that they get. Okay. I think that this whole push to lower and cap the interest rates is going to really hurt the informal sector and SMEs.
So you wouldn't advise the president?
I would advise that to be a considered opinion, because the fundamental reality is that banks are going to contract their lending.
And you would not advise the president to assent to it?
I wouldn't advise. The repercussions on the economy are serious.
We'll leave it there.
I would only say one thing. Whenever we try to change a system, there is always a very high resistance. When late Honorable Michuki tried to change the traffic rules so that we can bring sanity into traffic industry, there was a lot of resistance.
And Anzetse doesn't seem to agree. She's shaking her head.
We would not expect anything less of what the banks are doing.
Okay. They're going to lend less. That's what's going to happen.
Out of the 10 best performing companies in the country, 7 of them are banks. Banks are reaping from...
So are you punishing success?
We are not punishing success.
Banks
we
are
are
going
saying
to lend less.
We cannot allow the banks to continue reaping profits from our wananchi who are being auctioned day in, day out. We have a right to protect.
Honorable Njomo, let's leave it there. You want to say a final word real quick, Habil?
Because we always keep on talking about profits for the banks and we talk about billions, I think we need to put these numbers into perspective. Pick on KCB, for example. KCB made about 15 billion shillings in profits, and that's a huge number.
Okay.
But look at the investment by the shareholders. That's 80 billion shillings. What return are we talking about? 18%.
The entire banking industry made, what, about 145 billion shillings last year?
Yeah, but look at the investment that is put into the sector. to be able to generate that level of profitability.
We'll
And
start a
look at
whole-
the return on the investment.
We will start a whole conversation if we
It
go
makes very
there.
good sense when we compare the companies and the investment that they have made
All right.
and see what they have made. Then we
Jude,
can
Njomo, Habil Olaka, Anzetse Were. Thank you all for being here tonight.
Thank you.
We appreciate it. Obviously, a conversation that's not going to end tonight. We wait to see what President Kenyatta will do with that amendment when it comes up